So why should we buy personal insurance? There's a few key reasons. Obviously, there's final expenses if we lose our partner. There's raising our family if we lose our partner. There's education and bills and that sort of thing. And there's also some estate planning that happens in a family environment. So I'm just going to talk briefly about those and the various needs. Typically, if you just need insurance that's going to fill a gap, it's going to pay the mortgage, final expenses, and get the kids through university, you might want to look at a term policy. So you can purchase term insurance 10 years or 20 years, depending on where you're at in that process, where you just define a certain amount, you get the insurance, and at the end of the term, it's gone. So it's the least cost insurance, but it has no future value, and as I mentioned, at the end of the term, it leaves almost like a rental property. You pay for the policy while it's there, and when you leave, the policy's gone. When you're considering purchasing life insurance, you need to really consider the need. Is it a short-term defined need or long-term? So for example, if you're looking for insurance to satisfy your mortgage if your partner passed away, then you would get a term insurance. If you're looking for a long-term solution for estate planning or the tax liability for your children, you might want to consider what's called permanent insurance, which comes in the form of whole life or universal life. Most corporate business owners that I'm involved with buy corporate life insurance for a couple of reasons. The most common is a buy-sell arrangement. So if you have a business partner and you both have shares in the business, typically you would have a USA, which is a shareholder agreement. And in that agreement, it would say that upon the death of a shareholder, that the surviving shareholder would purchase the shares from the deceased partner's family, so that that family would no longer be involved in the company. So the corporation would purchase a policy on both of the shareholders, and the corporation would also be the beneficiary of that policy, so that upon the death of one of the partners, the corporation would have money to fund that agreement in the buy-sell and buy out the shares of the deceased partner.